What was the 2008 financial crisis? The 2008 financial crisis, also known as the global financial crisis, was a major economic crisis that began in 2008 and lasted until around 2010. It was triggered by the collapse of the housing market in the United States, which led to the failure of a number of large financial institutions and the near collapse of the global financial system. The 2008 financial crisis had a global impact and affected many countries beyond the United States. The crisis originated in the United States, where the collapse of the housing market and the failure of a number of financial institutions led to a financial crisis that spread around the world. The crisis had a number of impacts on countries around the world. 1. Economic recession. Many countries experienced an economic recession as a result of the crisis, with GDP declining and unemployment rising. 2. Stock market crashes. Many stock markets around the world experienced significant declines as a result of the crisis. 3. Banking sector problems. Many banks around the world faced difficulties as a result of the crisis, and some required government bailouts to stay afloat. 4. Impact on trade. The crisis had a negative impact on international trade, as global demand for goods and services declined. Overall, the 2008 financial crisis had a significant impact on many countries around the world and had far-reaching consequences for the global economy. What caused the financial crisis? There were several factors that contributed to the financial crisis. 1. The housing market bubble. In the years leading up to the crisis, the housing market in the United States experienced a bubble, with housing prices rising significantly. 1. This was fueled in part by the availability of subprime mortgages, which were offered to borrowers with poor credit. 2. The use of complex financial instruments. Many financial institutions invested in complex financial instruments, such as mortgage-backed securities and collateralized debt obligations, which were backed by subprime mortgages. 2. When the housing market collapsed and the value of these mortgages plummeted, it caused these financial instruments to lose value as well. 3. Insufficient regulation. There was insufficient regulation of the financial industry, which allowed risky practices to go unchecked. What were the impacts of the financial crisis? The financial crisis had significant impacts on the global economy. 1. Unemployment. The crisis led to high levels of unemployment as businesses struggled and failed. 2. Stock market crash. The crisis caused the stock market to crash, leading to significant losses for investors. 3. Government bailouts. Many financial institutions required government bailouts to stay afloat. 4. Economic recession. The crisis triggered a global economic recession that lasted for several years. What was done to address the financial crisis? To address the financial crisis, governments and central banks around the world took a number of measures. 1. Fiscal stimulus. Governments increased spending and cut taxes to stimulate economic activity. 2. Central bank action. Central banks, including the Federal Reserve, lowered interest rates and implemented other measures to stabilize financial markets. 3. Financial sector reforms. Governments implemented reforms to address the issues that contributed to the crisis, such as insufficient regulation and risky financial practices. Overall, the 2008 financial crisis had significant impacts on the global economy and led to significant policy responses. While the economy has largely recovered, it is important to continue to address the underlying issues that contributed to the crisis to prevent similar events from occurring in the future. Here are a few lesser-known facts about the 2008 financial crisis. 1. The crisis was not limited to the United States. While the crisis originated in the United States, it had a global impact and affected many countries around the world. 2. The crisis was not solely caused by the housing market. While the housing market collapse was a major factor in the crisis, there were other contributing factors as well, such as the use of complex financial instruments and insufficient regulation of the financial industry. 3. The crisis had long-lasting impacts. The crisis had significant and long-lasting impacts on the global economy, and some of the effects are still being felt today. 3. For example, the crisis contributed to a rise in inequality and a slower rate of economic growth in some countries. 4. The crisis led to policy responses. In response to the crisis, governments and central banks around the world took a number of measures, including fiscal stimulus, central bank action, and financial sector reforms, to stabilize the global financial system and stimulate economic activity. 5. The crisis led to changes in financial regulation. The crisis led to significant changes in financial regulation, with the implementation of new rules and regulations to address the issues that contributed to the crisis. I hope these lesser-known facts about the 2008 financial crisis provide you with some additional perspective on this significant event.